Welcome to Crash Concepts, where the economy, energy, and the environment are explored. Up next, fresh ideas and insights into the factors that are driving the world and shaping your future. Presenting information you can't afford to live without, here's Chris Martenson.
Welcome to this Peak Prosperity Podcast. I am your host, Chris Martenson. Okay, as the world anxiously awaits whether China will stock market by more economic stimulus or waits on tenterhooks for the Fed's rate policy decisions, those of us who track the undercurrents that really matter shake our heads in wonderment. How can people not see what we see? Energy is everything. The recent collapse in oil's price and the rise in various condensate and natural gas liquids obscure the fact that crude oil production itself has not climbed at all since 2005. Despite the investment of several trillions of dollars over the past 10 years in the pursuit of new crude oil. What that tells us is that it takes trillions and trillions of dollars to simply counteract the decline in existing oil wells. It's like we're on a coin-operated escalator, and the pace at which we're furiously slotting in quarters is just enough to keep it stalled at its current position. Soon, I predict we'll be feeding in quarters just as furiously, just to slow down its slump back to ground level. The central bankers of the world, they seem delightfully unaware that the escalator even exists or is important, but it's vitally important. To discuss energy and resource issues with us is Kurt Cobb, a Portland, Oregon-based author, speaker, and columnist focusing on energy and the environment. Love this guy. He's a regular contributor to the Energy Voices section of the Christian Science Monitor and the author of the peak oil-themed novel Prelude. Out of the limelight, he works as a marketing communications consultant, and he pens regular pieces for his blog found at resourceinsights.blogspot.com. I cannot think of anybody better to have on this topic, and I'm really excited for today's interview. Hey, welcome, Kurt.
Thanks, Chris. I'm glad to be on.
So let's start here. You just penned a piece on the lifting of the export ban, or so-called export ban in the U.S., but you felt it necessary to begin that piece by dismantling some myths about oil in the United States. What are they, and why did you feel it was necessary to have to dispel them at all?
Well, of course, a lot of people have been hearing the hype about the growth in production in the United States of crude oil, and that's been happening. But it's been happening with very high-cost oil. And so now that prices are down, and the industry is on its back, they're looking for ways to increase the amount of money they can get for their crude oil. Mm-hmm. And one of those would be to sell this light tight oil, which is oversupplied in the United States, to foreign refineries. They can't do it because of the export ban. I'm not sure that's going to help them much because the price of oil has gone down so low compared to what their costs are. And we've already seen a decline in U.S. output. So the prognostications that we were going to be energy independent in oil and that we were going to become the largest provider of oil to the world, I just don't think those are going to work out. And it shows us, I think, that high-priced oil leads to low-priced oil, which also leads to economic slowdown. And that's what we're seeing now. And that's the equation that you and I wonder how people don't see that these things are connected, and yet they don't. And I think you put your finger on it in the introduction, and that is people who run our central banks, who run our government policy, think that money manufactures resources. If we just put enough money out there, it will call forth the resources. And there's a little bit of truth to that because very cheap finance made it possible for us to lift this $100 a barrel oil out of the shale formations of North Dakota and Texas and other places. But that's not endless. And the high price puts pressure on the economy. And I think this is where we're going to have problems, is that we can't sustain those high prices in the long run. We have structured our economy for cheap energy, and that's not what we have. And so it's resulted in a slowdown that I think is the beginning of that transformation from a high growth economy to a low growth economy. In fact, we probably already began that in 2008.
Well, indeed, the economy worldwide has been subpar growth-wise for at least a decade now when you average it all out. And of late, the last few years have been really subpar. And I'm not surprised by that because you have too much debt weighing down on it. You have oil that used to be over $100 a barrel. That was obviously weighing on things, dragged down a few victims, Greece being one, I imagine, and a few others. But on this export ban, so-called, so there was some lifting, right? So the United States agreed to lift it in part with Mexico. So we'll ship tankers of this ultra-light stuff, basically gasoline straight out of the ground. It goes to Mexico, and then they exchange on some terms, some of their heavier stuff back. But this idea that it would really help U.S. producers, I'm looking right now at Brent oil for December delivery, and it's 46.45, and I'm looking at U.S. WTI, and that's trading at about $1.50 less. So it's really it wouldn't be a huge boost because the most I could imagine them getting for this stuff would be Brent prices, but although I think it might go for less.
Well, it probably will, because if they don't offer a discount, a little bit of a discount to Brent, then people will just buy based on the Brent price. So I agree. I don't think it's going to do much for them. They may be looking to the future. They're looking for a rebound in the price, and in my view, the price will inevitably rebound. I'm just not sure it's going to rebound anytime soon. So they've found the momentum in Congress to repeal the ban. They're going to do it now. They're going to try to do it now. It's not clear to me that the president's going to sign it in running up to an election year, but he might. It all depends on how people think, how politicians think the public are going to read this lifting of the export ban. Yeah. And right now, you've got the notion running about that America is somehow energy independent, or we're very close to that. And as long as the great mass of people think that, maybe they won't react to this. On the other hand, if you and I and other people inform them of what the real situation is, which is we're importing 7 million barrels of crude oil a day, maybe they won't take it so well.
Are we up to 7? Last I checked, it was like 5.5. We must have had a boost recently.
Well, the United States has been consuming more oil products as the economy has recovered a little bit more in last year and this year. But you're thinking of net versus gross, and because we take some of those imports, put them through our refineries, and then export the gasoline, the diesel, jet fuel, and so forth. So when I factor all that in, that puts us at about 6 million barrels net per day. So that's not so great either. But it does up a little bit because we've had to import more oil. As it turns out, as we've had declines in production in the United States, of course we're going to have to import more if our needs are growing. And they have been a little bit in the last 12 months.
Yes, little recovery there. Of course, cheaper gas prices, that does happen. But here's the essential part. I love what you're saying, which is, because this can't be repeated too much by people like us, because the marketing arm of the people on the other side of the story is considerably greater. The United States is still importing, let's round off, 6 million barrels per day. So looking forward, the way I run these numbers is, assuming demand in the United States doesn't go up anymore, we're just holding our demand steady for a while, for shale oil to really come forward and meet all of that, or any other oil prospects in the United States, we have to produce an additional 6 million barrels per day on top of what we already produce. And the way I'm looking at it, the shale operators hit the best plays the hardest they could, did a magnificent job, boosted us, about, I guess, 4 million barrels per day out of those plays. It's really, I won't fault it, what a heck of an effort. But the idea that we're going to put another 6 on top of that, the capital required, I don't think the drilling positions exist. I don't think we have the plays left. What's your views on that?
Well, I think you've hit all the high points. The one thing that I would add is that the confidence of Wall Street has been shattered now. These people raised, I don't know, something like $13 billion in the first quarter of this year, even as prices were falling, because investors, large investors, hedge funds, wealthy people, wealthy institutions, thought that they were going to buy at the bottom. That's what they were doing. And they found out that they were catching a falling knife instead. And so that finance, I think, is not going to be available to the shale industry as much in the future. People are going to be much more reluctant to part with their investment dollars after getting burned so badly. So even as prices rise, I think it's going to be difficult for the independents to raise money to go out and drill. So I think that's going to be another break on the development. Plus, as you've noted, they got the easy stuff first. This is the hard stuff, and they got the easy part of the hard stuff. So now they're going to go after the hard part of the hard stuff. That's going to cost a lot more money. I can see prices having to get up to 120 or 130 to really make it profitable for the kind of oil or the difficult parts of the formation that they want to drill. And of course, that would probably send us right into another recession. So I think we're in this narrow range of oil prices that will keep production rising, or at the top end, send us into a recession. And we are trying to find the sweet spot in there. And I just don't think that we can do that. Not with all the imbalances in the world today, the financial imbalances. You mentioned a lot of debt, the trade imbalances. I think it's, I don't think that central banks, I don't think that world governments have control of the world economy the way people like to think they do. And that they are in some ways as much in the dark as any of us. We're going to find out whether they do in the next few months.
Well, I'm one of those who believes that they do their level best to manipulate prices, and there's lots of ways to manipulate their direct and indirect methods. They manipulate when they come out and jawbone markets higher. They Bank of Japan manipulates when they buy all the JGBs out of the postal pension system and force them to take that money and go put it somewhere. Wink, wink. Put that into equities, please. So there's lots of ways to just keep this all propped up. But here's the thing that mystified me is I follow the shale industry pretty closely, Kurt, and even when I was looking at it 2 years ago with oil over $100 a barrel, everybody's hemorrhaging free cash flows. So I'm an old school business analyst. I love to tear it apart. You got three statements to worry about: your balance sheet, your cash flow statement, your income statement. I believe that once you look at all three of those, you have a sense of things. And when I see a company that's mature and consistently hemorrhaging free cash flows, at that point I say there's something really wrong with this business. So if I was analyzing the shale business and they were an auto parts company, I would say, wow, short target. These guys are just burning cash. I know they've got their balance sheet all propped up and their income statement seems to be okay, but look at this. They are just burning the cash. And so I've run this exercise. I'll just take some companies that I know have a lot of debt, and I'll sort of turn off the spigot and say, if they don't put any more capital in, how much oil would they have to get out in order to just pay their existing debt back? And Kurt, I find company after company where they, at today's oil prices, they cannot possibly pay back just existing debt, but they're still drilling. They still have capital programs. They've still got money from Wall Street. I think the number I have is $44 billion by the shale operators in the first 6 months of 2015. It looks, smells, and feels like it really is feeling scamish to me at this point.
Well, you really are old-fashioned. I mean, you haven't gotten to the new finance where you don't really have to make any cash. You can just keep pulling in investment dollars. I think that's what's happened. Yeah. Is when you run out of other options. I mean, the drive for returns in a low-return world has forced people out of safe instruments, like bonds and savings accounts, and has forced investors who want to make a high return, into risky investments. Well, this is one of the last ones that's available, and it seemed to be doing well. Everything looks good on the way up. It's just how is it going to perform when things aren't doing so well? The operators, the people who are doing the drilling, are making a lot of money. They're paying themselves big salaries, and I'm sure they're getting bonuses, and they have stock options, and they've exercised them and sold some of their shares. So they have no incentive to stop. Say, well, what about the health of their companies? Well, they know better than anyone that the whole thing is a house of cards. So if I were running one of those companies and I was only concerned with my own wealth, then I'd try to gather as much capital as I could by hoodwinking the people who were going to give it to me, drill as many wells as I could, and create what a lot of these guys were trying to do, is create an asset play. They were drilling wells that they knew weren't going to give them any return, but then they could put those reserves on their balance sheet and say, look, we've got all these reserves, we have huge assets, and you either bid up the price or somebody make an offer for us. And we've seen some of the major oil companies make what I think are very ill-timed offers for large drillers in the United States, pay top dollar. I puzzled over why smart people like Exxon would buy XTO, which was the largest natural gas driller in the country, in 2008 at the top. There is an explanation for it. We can get into that, but there's all kinds of strange decisions being made by seemingly smart people, some of which I can explain and some of which I can't.
This is fascinating. Let's do this because it was about a month ago, I came across an article, I think in fuelfix.com, that talked about how, hey, there's a little slowdown in drilling in some places, but all the majors hadn't slowed down a bit. So if you looked at their 2013, 14, and first half of 2015 drill programs, the biggies, the Chevrons, the Exxons, et cetera, they hadn't stopped their horizontal drilling program. You couldn't even detect that the price of oil had done anything. And so here's where I went a little old school business. I'm thinking, oh, well, maybe these big majors felt a little left out of the acreage plays. They were a little late to the game. And if they can just keep drilling, they have the capital to do that. They keep oil well supplied in this country. Maybe they have a chance to pick up acreage on the cheap. That's as close as an explanation as I could fathom. What are your insights there?
Well, it occurs to me that the majors are going to pick up a lot of distressed assets and just sit on them until until prices rise, and they're waiting for that. Now, they picked up some rather expensive assets from these shale drillers. I think they didn't realize just how expensive. But again, they can sit on them. Now, their drilling programs, well, there's a lot of momentum. I mean, these things were in place probably by at the beginning of last year. And so they've got the money, they've got it allocated, they've got the contracts, they're going to drill them. But that doesn't mean they're necessarily going to put them into production. And that's the difference between the majors and the independents. The independents are so debt-ridden. They are so up against it. They have to produce whatever they drill so they can at least get some money to pay the interest on their debt. Otherwise, they'll break the covenants, and then who knows what's going to happen. They might be forced into bankruptcy, and I think many of them will be. The majors, they can go ahead and check out and see what's there, and then they can just cap it and they can wait. They have the ability to wait. They have the cash and the power to. And I think that's, it's not that they're not going to produce any of it. It's just they're not in a hurry.
Well, it certainly seems like to me, it looks like there's a strategy being played out here, which is we're going to use our size to survive. Which total good strategy. Honestly, I could have thought of that with you in, over a couple of drinks in an hour or so. So I'm sure they've got that going. But is that really, you think that's the play right now? Just sort of like hunker down, wait for the storm to be over? Is this the Forrest Gump with the shrimp boat strategy, right?
I suppose it is. Although he wasn't rich before then. I mean, these companies were already rich, so now they're doing the smart thing this time through instead of doing the dumb thing, which they did in 2008, which is buy up expensive assets. They're buying up cheap assets, and I think they're just going to sit on them until the time comes. They don't have an incentive to oversupply the market because they don't need the cash. So why should they take oil out of the ground now? Why not just wait? They can do that. I really think that's their strategy. Explicitly so. Chevron talked about natural gas. Now, they haven't talked about oil, but they talked about natural gas. This has been a while. They said, we just don't think that it's worth it to put any new rigs in the field until we get up above $5, closer to $6 a thousand cubic feet. So they already have been explicit about that. At least that company has been explicit about just sitting on their assets until prices rise. And then I suspect not drilling them with the fury that the independents do, but drilling them in a way that will keep prices profitable.
Well, that certainly makes much better sense. And I would love to see a little of that more measured pace come to this, because I think I'm sure you've seen them. There are now these stories drifting out of, say, North Dakota, where we're clear there is one long-lasting, persistent thing about shale oil, and that's the damage to the roadways and bridges in the counties where the drilling takes place. What are your views on the chances that the residents and the taxpayers of North Dakota are going to be stuck holding the bill for those and other damages?
Well, I think they're already stuck holding the bill. I think that the damage is going to be much greater. And the thing is, it's not all in. Not all the damage has been done. And so, because these wells, they play out pretty quickly, and then they have to be capped. And then who's going to care for them? Well, supposedly the company's going to say, well, we've taken care of them and we've done what's necessary. We've done the minimum that's necessary that the state requires. But this is a little long term, but I asked an environmental consultant for oil companies that I know. I said, tell me about these well casings and how long they last. And I said, what are we talking, 50, 75 years? He said, oh yeah, the ones that are done properly will last that long. I said, what about 500 years? We're getting ahead of the game here. People who are listening now are not going to be alive then, but he said, oh no, they'd never survive that long. So the point is that ultimately these casings dissolve, and whatever in those wells, which is nasty stuff, is going to make its way into aquifers everywhere. And some of those wells, of course, are defective. Some of the casings are defective now, and so we're having problems in a few places now. So I think that this is the gift that keeps on giving. I don't think I want to call it a gift, but and the people of North Dakota don't know they still don't know what's hit them. They get all this enormous prosperity all at once, and then it all goes away, and the bills are left. But there's an environmental bill that I think is building up as we speak, that will continue to build for literally hundreds of years.
Yeah, and thank you for bringing that up, because I that's one of the biggest pieces that's left out of this. And I think all North Dakota would have to do, if I was a state official there, I would just look at, say, Wyoming, which has some pretty old wells on its property, and many of them are uncapped, they're leaking, the companies that drilled them are bankrupt, so now the state has to deal with thousands and thousands of these wells, assess them, try and understand them. In many cases, when the company folds, a lot of the data on the well went away, so you have to do some surveys. There's just stuff, and they're leaking badly in many of these places. So when you mentioned before that you thought that $120, $130 a barrel would be the necessary price for the drillers to really wade back in, I think you have to add another $20 to $30 a barrel on top of that to account for all these damages we're talking about.
Well, that's assuming that we want to incorporate the price of that damage into the price of the oil. I'm not sure that the states are going to be doing that. They haven't done it so far. Another thing let me say about those old wells, and that is because of the sketchy data that you end up with when a company goes bankrupt and who knows where the records are, we don't always know where they are. People discover wells that are on no map, on no known registration. So I think this is, and the other thing that we should ask ourselves, and the people of New York very wisely ask themselves this question: what's going to be more valuable to us in the next 200 years? Natural gas that comes out of the Marcellus in the next 10 years, or the water that we have to drink on an ongoing basis? And that, I think, is a question that people are just not asking. And there are like 2 million wells, more than 2 million wells now, drilled in the United States since 1946. You think about how many possibilities there are for pollution of aquifers. And not just, I'm more concerned with that than I am surface pollution. Surface pollution basically ends when it's capped, unless the cap doesn't work. And again, nobody really knows where all those wells are. So I think we just have a huge mess on our hands that we didn't think about when the oil age started. Who was thinking about that? Who knew that we were going to have this kind of growth in the economy, this kind of growth in population, this kind of growth in consumption? And now that it's here, I don't know how we can retrieve it.
Yeah, I run into this all the time. People don't really want to look at those long-term questions because the answers aren't good. And maybe New York did take a look at that and came what I think is a very reasonable conclusion, which is, we're not willing to sacrifice a tiny burst of prosperity now for some unknown, long-lasting things later. And by the way, if New York might change its tune if we were in some deep, deep energy emergency. But I think if you can buy gas for $2 or $3 a therm for 1,000 cubic feet, and why would you risk all this? But I'm sure it must be very, very alluring to the people of North Dakota, particularly the landholders. And it's interesting, Kurt, when you see what when the incentives are differently aligned as they are in Europe, where people don't have the mineral rights, where they would just incur the damage and the effects but get none of the money, boy, they put up such stiff opposition. I haven't seen any shale plays make it past the local opposition stage in Europe yet.
You're absolutely right, and because of that land tenure, in places like France, people are just universally opposed to it. So they've outlawed it because there was no point in proceeding. It would just be too hard to get any project moving. Our sort of Byzantine land tenure here, divides, provides, these sort of subsurface rights to the, not always, but often to the landholder, and sometimes the airspace rights. I mean, this is sort of elaborate, sort of vertical rights scheme, and it's led to one of the things it's led to is America becomes the first oil power because it's very easy for individuals to just make the decision to drill. Now we're seeing the consequences of that. And of course, the profit was privatized, and now the consequences will be socialized, as in so many things these days.
I have heard that in other places. I'll have to think back where. So much of our biased narrative on energy here in the U.S., at least, it rests on this view that U.S. shale output is going to be a long-lasting and meaningful game changer. Heck, the U.S. is going to be oil independent by some shale industry PR, which you and I have already dispensed with. But let's discuss that, though. Is this, from everything you've studied, is shale oil a long-lasting game changer?
Absolutely not. It's a short-term boost to the U.S. economy, and it's reduced relative to the rest of the world. It's reduced our energy prices a little bit because we have a glut of this light tight oil that tends to reduce prices in the mid-continent. It doesn't do much for people who are on the coasts, and it was the main driver of job growth post 2008. So people say, well, what's not to like? The answer is it's not durable. And I think you're familiar with the Post-Carbon Institute study, Drilling Deeper. I mean, this is a really comprehensive study, independent of industry money, independent of government money. And it made, when you look at the report, it made some actually very liberal assumptions about what could be drilled and what the rates of production would be based on well history, not based on what people think can happen in the future, but based on what's actually happened. And that's the key to understanding what's going to happen with shale. You look at what's happened to it so far, you look at what the wells have done so far, and you remember that that's the easier stuff that we're looking at, and it's going to get harder from here. And it immediately leads you to the conclusion that oil production rates from shale, which is the major growth engine for oil production in the United States, is going to be a fraction of what it is today 20 years from now. Well, that means we're going to have to find some other sources of energy or import a lot more oil. And you and I both think that it's going to be troublesome to be try to import more oil. You've had Jeffrey Brown on recently, and I think he's explained very well why it's going to be very difficult for us to find that oil in the international markets. It's just not going to be there.
Everything that I'm seeing. So prediction hat time, because here's the thing that concerns me is looking at the dramatic fall off in capex, which began, by the way, in February 2014 was the first article I was writing about it, because in 2014 oil was still at 110 a barrel, and all 7 major oil companies, actually 10 international oil companies, had all said, hey, we're either freezing or we're cutting capex because we just can't really do capex and shareholder dividends at the same time. And then, of course, you cut oil in half from there, and what happens? These capex budgets have been shredded. And so I mentioned this before. We're on this treadmill. We plugged trillions of dollars into this this escalator. We've plugged trillions into it, and we're going nowhere in terms of oil output. What do you see as, and again, predictions very difficult, especially about the future. But what do you have? What do you see? What's your trend extrapolation? What do you think is going to happen here in a few years?
Look, the major international oil companies made a business decision. They figured out right away that the prospects that they have, that the leases that they have, deep water, Arctic, these are the places where there's a lot of oil, but it's very expensive. They just couldn't even make money at $100, $110 a barrel. Of course, you're rightly pointing out that now with oil below 50, there's a lot more of their leases that are not going to be profitable to drill. So they've just cut back and they said, we're going to make money off of what we currently have that we can produce, and we're going to wait and see. So what does that tell us? Well, it tells us that for those majors, they're going to continue to lose, the rate of production is going to continue to go down, which it has been for a few years now. I think people are not aware of that rate of production for the largest international oil companies in the world has continued to go down for the last 7 or 8 years for most companies. So that trend is in place, and I think it's going to continue. The big question is, can the national oil companies, the ones owned by the Saudi government, Saudi Aramco, can the National Iranian Oil Company, can these other national oil companies, can they make up for that? And there's an assumption in policy circles that there is just so much more production that can come out of those countries that we don't really have to worry about declines from the international oil companies. I'm not of that mind, and one of the straws in the wind was Saudi Arabia telling us explicitly, we will never produce more than 12.5 million barrels a day. When many forecasts, even as recently as 2011, I might be wrong on the date, but it's recent, had assumed that the Saudis are going to produce 15 million barrels by 2030, 15 million barrels a day. When they said, no, we're not. You're going to have to figure out how to do that. Now, either they're saying that because they have chosen to reserve some of the oil that they have for later, or because they can't produce more than 12.5 million barrels a day. I don't know the answer, but it actually doesn't matter what the answer is. It tells me that there are limits even for national oil companies for whatever reason. And so I'm inclined to think that we're going to see falls in worldwide production of oil in 2, 3, 4 years. That's going to be shocking, and it's going to be jarring for the economy and for policymakers.
And of course, very well said. I, along with many others, track this very tight relationship between energy and the economy, oil being one of the key components of that. And you alluded to this before, but what do you think the price of oil is really telling us right now?
I think it's telling us that the worldwide economy is very weak. Of course, there was the production from the shale fields that was increasing, and OPEC decided, okay, we're just going to continue to produce at the level we're producing. They didn't add, we're just going to produce at the level that we're producing. And as demand falls, somebody else is going to reduce their output. Well, look who's doing it. Involuntarily, but they're doing it anyway, and that is the shale players in the United States and in tar sands in Canada, having to reduce because it just isn't worth drilling extra wells. It isn't worth increasing production. So I take from that the economy is getting weaker and weaker, and that's been borne out. When this happened last year, I read some pieces and said, that's what this is telling us. And of course, that wasn't the storyline. It was this cheap oil is here because we have this glut, and because and it's going to actually cause growth in the economy to increase because we've got cheaper energy. Well, that's not it at all. And if with these prices persisting, like these low prices persisting, if I look at that and I look at the action in the stock market, and correlate those two things, I think, well, the stock market is just starting to reflect that weakness in the world economy. Whether that weakness will persist is anybody's guess. But I would say watch the oil price very carefully, because it's going to be the first indication about whether the world economy is getting weaker or whether it's getting stronger.
Interesting. Yeah, I certainly can't make a strong case for a good, robust economy with oil languishing around. In fact, the deflationary forces seem to be pretty strong. I know that every central authority from China to Europe has a very compelling interest in not allowing deflationary forces to begin to stir and ramp their way across the landscape. But oil is clearly telling us something, and if it was more in demand, it would obviously be at a higher price, I think. So that's, yeah, I agree with you on that.
Well, let me also say that you don't have to just, you could say, well, that's one price. We shouldn't just put too much emphasis on that. But if you look at what's happened to copper, what's happened to silver, what's happened to lead, what's happened to zinc, and if you look at all these sort of major, you look at what's happened to coal, you realize these are all way down. Iron ore, way down. And that tells us that the things which are the building blocks of our modern economy are not in demand. How can that not mean that we have a weak economy? But somehow people think that commodities, the real things that we use to make stuff, don't matter. Go figure.
Yeah, so that's something I've been carrying for a while, and obviously, you write about resource insight, so we can't really talk resources without talking China at this point. Your views, as you look across, obviously I see that same data, what does a collapse in the price of iron ore, plus cement, plus coal, plus copper, plus oil mean? Well, probably not something good, and the biggest consumer, of course, is China. Do you think, is this a temporary pause in China's voracious appetite, or do you think this is a more long-lasting change in consumption?
I think it's a longer lasting change, and China is going through what every emerging economy that has grown robustly goes through. They have to get to the point where they stop having an investment-led economy and they have to move to a consumer-led economy. And that transition can take many years. It means that income has to be put into the hands of individuals rather than corporations. And that can be managed, but I don't think that they know how to manage it. One of the things that tells me that the slowdown is for real in China is electricity consumption. Last year, electricity rose by about 3%. And electricity consumption growth in China has been lockstep with growth for about 20 years. In other words, you get a 1% of GDP growth, you get 1% of electricity consumption growth. And they're telling us last year that the growth was 7.5%, something like that. And electricity consumption growth was 3%. Then at the beginning of this year, you had month-on-month declines in electricity consumption. Consumption was actually shrinking. And that told me that the Chinese economy was actually declining. That's one measure. There are other measures, but they seem to line up. And I don't think that China can now reverse course and say, well, we're going to go back to an investment-led economy. I think they're trying to move in this direction because they'll just build up more capacity and the bust will be even worse when it happens. I think that the sentiment has turned, that one of the things that has made the central banks in China, elsewhere, effective is that they were able to guide sentiment. We're moving in this direction, so you should too. I think now that faith in central banking and in central governments is declining, and the inability of the Chinese government, think about the kind of controls that they have versus the United States over their financial system. And they were unable to stop a 40% decline in the stock market with a very determined, very expensive effort. That tells me that they've lost control, and if the Chinese have lost control of sentiment, which is what they really need to control, I'm not sure that the rest of us aren't far behind.
Yeah, that's certainly how I've been reading. And of course, the volatility in the markets has been saying that something is up. And the mysterious part to me here, Kurt, through all of this is that with the lens that you and I might look at this through is to say, well, obviously it wasn't possible to exponentially increase your consumption of resources forever. And I'm wondering, where do you think we are on that cycle? Are there actual sort of limits that are popping up besides, you mentioned the price of oil is obviously an economic limit, to get as much out of the ground as we might want. It might cost $120 a barrel. If that's the new price, you express some concern as to whether the economy can handle that. But are there any other sort of limits you see us bumping up against that are going to maybe poke a hole in that idea of perpetual endless growth?
Well, probably the most important limit that I see is fresh water. Water and energy are very intimately linked. You need a lot of water to produce energy. Think about the kind of water you have to put into a coal-fired power plant. You have to boil a lot of water. A nuclear power plant, you need to boil a lot of water. And you can't just throw seawater in there, it'll corrode everything. So also you've got irrigation demand and drinking demand. in the cities. And we are using that at a rate that's much higher than it's being replenished if we're using underground water. Or we also are seeing, because of climate change, that snow melts around the world that provide, spring and summer water to major cities and major growing areas is just not there. So I think that's going to be a significant limit on what we can grow in terms of food, on what we can process for those process industries that need a lot of water, on the energy that we can produce, because we need a lot of water to do that. There are other resources, rare earths. Rare earths aren't as rare as you might think they are, but we are using them at an increasingly higher rate. And as you know, the faster you use something, the faster you deplete it. So as we try to create this electronics utopia that we have in mind, we're using using resources that are, they're not totally rare, but they're you can use them up at the rate that we're using them up. We may find out that we've created a whole electronics industry dependent on resources that we just don't have enough of at some point. I'm not predicting that that's nearby, but when you start combining these limits, you'll find that, if you have one or two or three of these limits, the rest of society doesn't work very well. So we don't have to have a limit on 10 things to have problems. We just need a limit on 2 or 3 key things, like food production and water and energy, to have this cascade effect on our ability to produce other things.
Absolutely. And I my mental model for this is that where resources were more or less ignorable for a long time, they've now become an increasingly vigorous headwind to the old paradigm. Unfortunately, I don't see a lot of people in the halls of power who understand that or want to admit that. In fact, I see a lot of efforts being expended to convince us that, as clever monkeys, limits don't apply to us. And you have crazy people at certain think tanks coming out and saying, no, you have it all wrong. Kurt, Chris, the more people you get, the more resources you'll find, because that just means more minds on the issue and all of that. So it feels to me like, though, that like you mentioned, that the veneer might be cracking in that autocratic control of China, and that something is shifting. That's what I'm sensing more and more, particularly in younger people, particularly in people who aren't as invested in the status quo, needing to continue for them to realize whatever dreams, belief systems they have and all that. Are you feeling like do you have that, like, to me, that's a little sense of hopefulness that that there's more territory now to have these conversations than before, or are you experiencing it differently?
No, I think you're right. Younger people, this millennial generation that's coming up, they understand something's up. They understand that things aren't working the way that they thought they would. They're not seeing the opportunities that they were told they would have. They know something's wrong. And so therefore they're open to solutions. They're open to new ideas. They're open to ways to make the world a place where they can realize their dreams. If you're already invested in the world as it is, if you are, the CEO of a large fossil fuel company, or the CEO of any large company, you already have achieved your dream. You don't want it to go away. So I think that's the fight that we're seeing. In terms of policymakers, they don't see what you and I see, that we live in a full world. This is Herman Daly's idea. And we know that because we're affecting climate. We've got people now who are understanding that we are in the Anthropocene. We're in a new geologic age where humans are the biggest force of nature on the planet. And here's the basic problem in our thinking. And I've been talking about this all year in my writing, and that is, we think that humans are in one category and nature's in another. And as long as you believe that, you will do all kinds of crazy things. You'll think you can do all kinds of crazy things. And you and I know the truth that humans are part of nature. And so we have to figure out how to live within the natural world, within the limits that it prescribes for us. We have to understand that we don't have complete knowledge. We only have very partial knowledge of how natural systems work. That requires humility, and that's something that the human race is pretty short on these days.
Wow, I agree with every word of what you just said. Absolutely, and that's very much my viewpoint at this point. Everything from the humility and the things we're discovering, Kurt, on a daily basis scientifically are astonishing. I was taught about, like, for instance, how DNA worked, and it was this linear, very unexciting thing. Like, you just chop it up, and this codes for a protein. And the things we're figuring out now about what it's actually doing, maybe it isn't 95% air quotes here junk. Actually, turns out it's ridiculously complex, and that turns out to be true for everything. So yeah, my hope for this clever monkey species of ours is that we develop the necessary humility to know that we don't know everything yet. And
well, let me say one more thing on that, and that is we have the actual science, which is what you're talking about, and scientists who are involved in these emerging areas like soil science. We're discovering, my God, soil is so much more complex than we ever imagined it was, and the things that we're doing it are wrecking it, but we're not sure how. And of course, in physics, you're getting this tremendous expansion of ideas about how the universe formed and new ideas about new particles and so forth. And in all these cutting edge sciences, we're finding out the world's far more complex and far more astonishing than we imagined. And we're having a harder and harder time putting together a unified theory of how everything works. But as opposed to that, we have what I would call, and I didn't think this up, this is a term that's been used for a while, we have scientism, which is a belief that the world works according to known principles and that knowledge is unified and that we can direct that knowledge to get out of the world exactly what we want without any bad consequences. And if there are some bad consequences, we can always fix it. That is a religious belief. Scientism is a religious belief that the future will always turn out the way we want it to because we have this power of this technological power. Real science is telling us that we're in trouble. Climate science is telling us we're in trouble. The people who study fisheries are telling us we're in trouble. The people who study hydrology and aquifers are telling us we're in trouble. Real science is saying things that the people who are applying, or in applied technology, who are making money off of that, don't like. Large corporations like science that helps them make money. They don't like science that tells them that they're undermining the habitat of the ecosphere and endangering our very existence. So that's the split.
Again, very well said. And that's the time we have for today. Kurt, thank you so much for your generous time and what a great conversation. Can't wait to have you back.
Chris, I've enjoyed it and hope come back soon. Take care.